Time now for an in-depth look at the market news on this Friday, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thanks for coming on today.
Good afternoon.
Well, let's start with Samsung Electronics, which today, of course, released its earnings guidance for the third quarter. It's estimating that sales came to 73 trillion won, which would be a record high. It's about $61 billion, an operating profit of about 16 trillion won, the highest quarterly number in 3 years. Samsung shares were closing only slightly changed today. What's behind the strength we're seeing at Samsung?
Right. As you said, the numbers are coming in very strong, but it seems that continuously in the last 2 quarters, maybe even the third quarters now, that the earnings releases are all better than expected, but share prices are falling. From the peak of the first quarter of this year, now the share price is down more than 20% plus. But if you look at the operating profit numbers, it came in at 15.8 trillion, which is about 25.7% Q-on-Q growth and 27.9% growth year-on-year. And the sales numbers are also up 14.65% Q-on-Q and year-on-year of over 9% growth. Now, these strong earnings were mainly driven by the increase in DRAM and NAND prices, an upturn in smartphone shipments, and also the higher OLED capacity utilization rates, and also the foreign currency, the Korean won depreciation. All these are resulting into the quite strong numbers. But despite all these better than expected earnings and strong growth rate, we saw earnings going down. We saw share price going down on uncertainty that maybe the fourth quarter numbers are, and also maybe the first quarter of next year are not going to come in good, and that there's a continuation of worry about the disruptions in the IT supply chain, and that the demand in DRAM and NAND prices might be falling, and therefore the prices might be going down. So these are a lot of ifs, and they continue to focus on the possible negative potentials about this company. And that has resulted into overall Korean market being quite weak relative to other Asian or other global market.
Well, on Wall Street overnight, another rebound, again in the 1% range for the major indices across the board. Some risk reduced with the Senate agreeing to raise the debt ceiling. What's the story today in the global markets?
Yes, as you said, U.S. market did recover very nicely in 2 days in a row, where Dow added about 338 points, the S&P 500 surged 0.83%, and tech-focused Nasdaq composite jumped 1.05%, despite the interest rate were rising. Clearly, this is because of the possibility that the debt ceiling agreement will be met. It's a temporary agreement until the December 8th, but nevertheless, we're not going to have a possibility of problem as the Senate passes this short-term relief. But I guess continuation is that people are worried about whether this is going to be passed through in a longer-term basis. Once again, this will become another issue in December. As for the other numbers like what's happening to the unemployment benefits or the labor market numbers are coming in at improvement relative to the previous month. Of course, not as strong as what we hope to see, but nevertheless, we are seeing better than expected of the last month of numbers, meaning that the tapering will happen probably before the end of the year, and that people are worried about the possibility of interest rate hike in a short-term period of time rather than, say, in 2023. So if the Fed raises interest rate faster than expected, that could have a negative implication in a longer term. But at least for the short term, the debt limit deal has made market to further rise.
And today in Korea, the market started out higher, but it was choppy, and in the end, they closed slightly lower. Some of the worst performing sectors were related to international travel, shipping, trade. Some analysts not seeing the Kospi doing as well as they hoped going forward. Tell us about the domestic market and what you make of the major move lower we've seen lately.
Right. It is very hard to analyze what's happening to the Korean equity market other than the factor that the currency is moving in opposite directions relative to what's happening to the export numbers or the current account surpluses and whatnot. Clearly, the domestic investors continue to be the net buyer of the Korean market, but when you have an institution continue to be selling the Korean market, it's going to be tough, especially when national pensions are selling the market. It doesn't make any sense for the market to go up on a so-called liquidity issues. And also, as you know, that the BOK have raised interest rate. Potentially, they might raise another interest rate. Despite that, U.S. is not doing interest rate hike. But nevertheless, if the concern about this inflations and also the consumer credit, we are seeing a tighter liquidity in Korean market than any other countries. So therefore, that has resulted into Korean market being weaker than most of other countries. Clearly, the market is not moving on the basis of fundamentals, but the sentiment. And also, before the end of the year, there is a tax issue related to the capital gains. So therefore, I guess people are worried about that as well. So from the year-to-date numbers, if that number is higher, then obviously the tax will be high. So for the large cap stocks or any major shareholders per se. So therefore, I think that this is all about technical. It's all about tax-related, not necessarily the fundamental based. So after this year is over, probably, then on the basis of fundamentals, market will move higher on the basis of higher payout ratio in terms of dividend. And if you look at the dividend yield for Korea now, it has reached as high as 4% plus on the basis of the analyst assumption at this point in time.
And finally, Mr. Yu, if we could go back to a major issue you mentioned there at the start, we're seeing the exchange rate for the Korean currency move higher and higher. Treasury yields, of course, too. The dollar is much stronger right now than it was earlier this year, and we're right on the cusp of reaching 1,200 won to the dollar, which we have not seen since the volatility of summer 2020. So where do you see things going in the near term with respect to interest rates and the currency?
Right. I mean, it really does not make sense in terms of the currency movement other than the sentiment. If you look at the interest rate hike, as you know, the Korea raised interest rate. So Korea is at higher interest rate than other countries or U.S. per se. And also, if you look at the current account surpluses, it has widened to 7.51 billion in August from the 6.64 billion in the previous month. Clearly, if you look at the dollar gaining, or so-called, I guess, the net inflow of dollars is very strong for Korea, but it seems that currency is moving in the opposite directions. I guess only reason for that is because people are worried about U.S. interest rate hike in the near term. And if you look at the 10 years government bond rate of U.S., it has risen to now 1.59% on the futures market. So clearly the rising trend of the U.S. interest rate is putting pressures on the currency of the Korean won. And tentatively, when you have a direction of the dollar index moving in an appreciation pattern, the Korean won tends to depreciate in a twofold. So if the dollar appreciates by 5%, Korean won depreciates by 10% in the previous several years, it seems, in terms of trend. So for the time being, in the short term, they're not really looking at the fundamentals. They're just looking at what's happening to the trend of the currency. And at least for the short term, we don't see Korean won stabilizing anytime soon. It might take maybe a few more months.
All right, we'll be keeping a close eye on that with your help, as always. Mr. Yu, thank you. We appreciate you sharing your insights with us today, and have a great weekend.
Thank you. You too.